Okay. All right. So I think we're through. So we'll just get started. All right. Good evening, everybody. Fellow Guyanese. Good evening, and thank you for joining this discussion. Tonight, I have the privilege of having three distinguished panelists who will educate us and inform us on whether we're heading into a recession and what this means for us. But before I introduce the panelists, I will offer some opening remarks. First, I'd like to acknowledge and say that I know every one of us right now are concerned about the outcome of the elections. In fact, to say that we're all frustrated and fuming would be to put it mildly. While any discussion on the state of the economy cannot avoid the issue of politics, we will do our best to set the election aside for the next 1.5 hours or thereabout to talk about the economy. In other words, for the next 1.5 hours or thereabout, I'm going to ask all of us to walk and chew gum at the same time. The second thing I'd like to say is, we can disagree on many things, but that we are all living once more through a period of political and economic turmoil is not one of them. So how we come out of this turmoil, however, rests largely on the questions that we will ask, the answers that we will receive, and the decisions we will make on how we move forward. If we are resistant to new thinking, history is bound to repeat itself, and often with less mercy, ensuring that all Guyanese have the opportunity to climb the economic ladder, provide for their families, enjoy peace and security, and to pursue their own happiness is not a romantic reality on which our desires lurk. It is the fundamental goal of our economic system, as is enshrined in Chapter 2 and 3 of our Constitution. Now, the discussion, therefore, that we're having tonight is precisely what our framers intended for us to have if we're to truly build an economy and a society that is prosperous for all of us. So to help us to answer these hard questions relating to the state of the economy and whether we're heading into a recession, the three distinguished thinkers that I have in front of me are people who have very profound knowledge of the way the economy works, especially within our context, and they all have careers in which they continue to monitor and manage some aspect of this information and knowledge on a daily basis. So first I have with me Mr. Richard Rambarran, who is a man of many hats, but tonight the one that he is wearing is a lecturer in economics. I have Mr. Sidney Armstrong, who is currently the head of the economic department at the University of Guyana. And I have Joel Bhagwandin, which is no stranger to any one of us, who's also a man of many hats, but tonight he's wearing the one as a lecturer in business economics. So gentlemen, thank you all for being a part of this discussion. And I'll jump right into the first question. To each of you, I'm going to ask a very pointed question to start with, and that is, are we heading into a recession? Yes or no? And depending on your response, give us some justification as to why you feel that way. And Richard, I'll start with you.
Dhanraj, sure. And good evening to you, the panelists, as well as your viewers. And thank you very much for the opportunity. Dhanraj, you've asked me a very complex question, which over the years, economists have tried to ascertain in a very simple way. So as I am the first speaker, I want to start with what economists technically define as being a recession. And a recession, according to an economist or according to an economist's definition, is one in which two consecutive quarters in a year or for a country is marred by negative economic growth. Now, 2 consecutive quarters equates to about half a year. So one would have to look at the Guyanese economy, and certainly we would look forward to the mid-year report at some point in the near future being produced. But if one is to look at the technical definition of what a recession is, and note from an anecdotal perspective what has been happening in Guyana as a result of the polity, as a result of the prevailing public health situation, and as a result of the global economic downturn, one can say certainly that uh, we would be, or we are anticipated to be headed towards an economic recession. Couched within that framework, however, one has to look at perhaps what Guyana's year-on-year growth has been, and then juxtapose it against what we are currently seeing. But from the outset, I want to say very pointedly to your question, Dhanraj, and very succinctly, that I do believe that within the context of all of the uh, instances and occurrences within Guyana, that we are, one, currently headed towards an economic recession, and two, I would say within certain sectors and within certain industries, we have already begun to feel that there is an economic recession happening in Guyana. So I'd offer those as my prefatory, and of course, we'll expand on this as the evening goes on. Thank you.
All right, I will take the other go. Uh, Good night, everyone. Dhanraj, let me first extend a thank you for the invitation to be a part of this discussion. But before I answer your question, I think I need to make two important statements. The first, I want to lend my voice towards ending racism in Guyana. I think we've had a big issue with racism, and I think I want to be a part of the mechanism to change that. I think the faster we recognize that we are interdependent, we need each other, not only for development, but even for survival, the faster and quicker we recognize that, we would be able to move this country forward at a faster pace. Secondly, I want to commend our first responders in terms of keeping us in a position that is a favorable position. I think much hasn't been said lately about the situation, the COVID situation, the many recoveries we've been seeing, and we need to give commendation to the first responders. In a time when we were regarded as being one of the least prepared economy or country, these individuals selflessly get up, went out there, and ensure that we're in the position that we're in. I have to make that point. Now, getting in line with the question, I want to agree with some of the points Richard made, but I'll disagree with some. Indeed, when we talk about a recession, the technicality suggests that it speaks to at least 6 months minimum of downturn in economic activities, contractions in many important and key sectors. I think when you look at Guyana's case, however, in fact, the world is facing this current downturn. But when you look at Guyana's case, our economic activity in terms of contraction actually began or started to take a hit after March 11th. So as it is, we're currently 3 months into the COVID-19 battling, and many of the economic measures have been put in place this time with the spread of such pandemic. And these economic measures, especially the curfew and the closure of non-essential services, have really hit the economic aspect very hard. Now, here's where I disagree a bit. I disagree because we don't expect that the situation to remain as it is.
Can I, Sydney, just before you get in deeper, can I ask you to hold that portion of the response? I just want to set the stage to know where everybody is. Then we're going to debate on the issue.
All right.
All right. So Joel, let us get your take on where you stand on this.
All right. Good evening, Dhanraj. Good evening to your viewers and to my esteemed panelists. And my take on your question, as you know, my two colleagues, senior colleagues, including yourself, Dhanraj, you're all trained economists, and I'm not a trained economist. I'm qualified in a different field, though I'm an analyst by heart, right? So my language might be less technical than my other two panelists. And so my interpretation of an economic recession or a recession simply means there is a slowdown in growth. There is contraction means when we talk about the sectors contracting, we're talking about slowing down in growth in these sectors and then in the entire economy. And when you look at our economy is a very diverse economy, and we're commodity based, unlike our sister countries in the Caribbean who depend largely on tourism. So we have an abundance of natural resources, and we produce commodity which we export, and we have a relatively thriving manufacturing sector as well, right? So recession means in my layman terms, a slowdown in growth. What is growth? Growth, when we talk about economic growth, the measure that we use, the metric that we use to measure economic growth is GDP. So what is GDP? GDP constitutes four variables, and those four variables measure spending in different areas. So you have government spending, you have investments, and that investment includes local investments by local firms. You have foreign direct investment. You have spending in consumption. Consumption expenditure has to do with household expenditure, that expense which you spend to maintain a household, your grocery bills, paying your utility bills, and those sort of things. That is consumption. The food we consume, the clothes we consume, those are consumption. And then you have your net exports. And we know for many years, we've always had a trade, our net export figure is a deficit. We have a trade balance deficit. We've never had a surplus, meaning our import is greater than exports. And over the last 10 years, we have seen coming down because we've started producing oil recently, and we found our first oil discovery was made in 2015. We've added a new sector to the economy. And while we started drilling oil only recently in 2019, you still had activities happening in the economy, which means spending because the operators need services out in there. They need materials, they need equipment, they need capital goods. And so an entirely new sector started to emerge. And when you look at Richard made reference to the reports, our economic reports from the Bank of Guyana and so on. And when you look at those reports since 2015, you would see that most of our investment, most of the foreign capital inflows are attributed to oil and gas related inflows. But then there is another flip side to that. The flip side to that is our import has ballooned. So when our import figure has been roughly at $2 billion, over the last 5 years, 10 years, we are now just over $3 billion in imports. All right. Now, we can't talk about a
So Joel, no, I just want to make sure that I'm getting you clear as you go on, and I'll allow you to continue the statement. So are you heading into the direction to say to us that you believe we're heading into a recession or not?
Yeah, let me land. I'm gonna land in 2 minutes, right? So coming back to the point of the question, whether there is a slowdown in spending, we can't speak about whether we're heading into a recession in isolation from our political economy reality, and that too compounded with the effects of COVID-19, right? The COVID-19 pandemic. And so we have been in a political rigmarole or a political fiasco since December 2018. And, each step of the way, it's so dynamic, it's so uncertain, it's so fluid. It's like you're watching a movie. You don't know, there are so many climax, there's so many suspense, you don't know what's going to happen. And so, at one point when we were at that point in our elections and we were talking about sanction, and I think Guyanese were terrified. I personally was terrified. And because I know what would be the consequence if economic sanctions, financial sanctions are imposed on the country. We would become poor overnight. We would suffer. We won't have food. Um, you know. So when we look at, we're in June already. All right. Remember I talk about GDP and government spending. We're already half of the year and we don't have a national budget. Now, government spending accounts for just over 30% of GDP. So already we don't have spending in the economy in terms of public expenditure. So that is out of the equation, since save and except for Richard and Sydney would tell you about the formula, the 2/3 or 1/12 formula of the budget. But largely government spending accounts for over 30%, and government spend in social programs, in development programs. So that is out of the economy. All right. And then we can't access the money because of the state of the government, of our political economy. Then COVID come and we had to close our borders. Closing our borders, some sectors, the tourism industry is virtually dead. When you close an airport, it means there is no tourists coming into your country. It means the hotel industry, the people in the hotel business, their rooms are basically empty. The restaurant businesses are closed. People are not dining. The entertainment industry is down.
So Joel, we will come to the specifics.
Yeah.
I still wanted to give you 10 seconds more to get me where you lie, regardless of the cause. Where are you leaning
in terms of where I lie, in my position, the answer is yes. We are heading into an economic recession because we don't know what is this. I mean, a lot of that, as Sydney had alluded to, it depends on things would change in the future. I mean, he sounds like he's very optimistic. I'd love to be optimistic with you, Sydney, but we have to be grounded in reality as well.
So Sydney, let me come back to a point that you made. You mentioned something that, and if I heard you correctly, you said that a lot of the decline that you were paying attention to, you recognize that this started to happen after May 11. Yes, March 11 or May 11, something like that. I think March 11 you said. Explain what that means, what exactly you're talking about, and help us to understand better what precisely you're referring to. Your mic is muted.
It draws on the point that Joel was making. When we first discover our first COVID-19 case, we went into a frenzy. And then the response was that there are certain measures that we need to take in order to stop the spread based on how the virus spread. Two of the important economic measures that were set in place was one, the closure of non-essential services. And so this goes back to what Joel was mentioning. So the non-essential services were available prior to March. So you had economic activities in your restaurants, you had economic activities in tourism. It existed then. Compounded to that, we talk about the curfew. The curfew impacted significantly on our entertainment sector. Because as you know, most of the, as the young people will call it, the vibes and the spending came after a certain time period. And so these economic measures put in place after or mid-March really hit this economy. And the point that I was making in terms of making the determination as to whether we're gonna go into a recession or not depends on when we decide to open up. It depends on how we handle the COVID-19 situation. Now, if the and so I must also agree with Joel on the fact that indeed we are facing two similar crises, simultaneous crises. You do have the political aspect, and you also have the COVID-19. But to just end on this note, as much as all of this is expected to happen, IDB, IMF still projects Guyana to grow at 51.2%. Now, assuming that everything don't go well, we're still gonna have to reconsider that number. Even if that number is about 10%, our economic growth last year was 4.7%. Then you can't tell me we're growing, but yet we're in a recession.
Okay. So Sydney, I want to make sure that I'm capturing what you're saying, and you can correct me if I'm wrong. In your perspective, there is no question about the impact that COVID is having on the economy. We're all in lockdown, services are on close, and this is going to, regardless of what the size of the economy, this is going to put a serious delta on the economy. But I'm getting a sense from the argument that you're making that even if we go back just prior to COVID hitting the economy and examine what has been happening over the past couple of years, I'm getting the sense that in your argument that you don't think, when you consider what is happening into the economy prior to that, you don't consider that there any indication that those would have set the stage for us to be heading into a recession.
Now let's because we're focusing on the growth rate here. So if you
remember, Joel is the one who locked into that growth rate business. And I simply said to you, tell me whether you believe we're heading into a crisis, because there's more than one way in which you're going to measure whether you're heading into a recession. Yeah. And I know Richard is itching, so I'm going to come to Richard in a minute, but I want to have your take if what I just summarized is your perspective.
Yeah, it is. Okay. My perspective is that when you look at the macroeconomic fundamentals, especially when you're talking about economic growth, and this is real growth. I'm not speaking about nominal growth. This is real growth. 2014, 3.8. 2016, 3.4. 2017, 2.1. 2018, 4.1. 2019, 4.7. IDB, IMF project 51.2, somewhere thereabout. When you look at investment level, and you can talk about private investment, also you can talk about public investment. And over the years, from 2013 to 2018, you've seen a consistent increase in private investment. You've also seen a consistent increase in public investment. So private sector activity has always been growing. And I can give you some numbers. In 2015, private investment was about 125 billion. 2018, that was about 281.7 billion. It has consistently increased. And we can talk about all of the linkages related to private investment. We can talk about the employment level. And I'll give you some more, because there's some other indicators that we can talk about. Inflation has been relatively stable. When you look at our inflation rate over, say, 2014, and this is an urban consumer price index, 1.2% in 2014, 1.5% in 2017, 2.1% in 2019. Stability.
Okay. So we're gonna come to some of the other measures. Let me go to Richard. Richard, you heard Sydney's position, and so I'm not going to repeat that. What is your take, and do you agree or do you disagree with him?
Yeah, so Dhanraj, thank you very much for that. And of course, my learned friend Sydney has identified a couple of key points, which of course they have been supported by the positions of scholars such as himself within the country, as well as multilateral organizations and IFIs, and he has mentioned rightly the IMF and the Inter-American Development Bank. But when you examine the growth rate, Dhanraj and viewers, from the broad macroeconomic perspective, it is very easy for us to be carried away with the numbers as well as what the numbers are really saying. Because when we begin to disaggregate that growth rate and we look at these sectors, then is when we begin to see what has been happening. Now, I'm happy that he mentioned this year's growth rate. And this year's growth rate is about 50%, 56%. It was projected to be roughly 85%. But of course, that figure has declined given the low price environment of oil, etc. Now, as we begin to move into an oil and gas economy, you will see a term emerging and a concept or a rubric emerging, which will be very often discussed. And that is what is happening with the non-oil economy. What has been the impact, or what have we been observing in the non-oil economy? So I'm happy that Sydney would have mentioned that, because it gives me an opportunity to examine in a very cursory way what the macroeconomic framework has been over time. Now, let me just give some numbers. And these numbers are taken from the Bank of Guyana's annual report. Dhanraj, as you know, and colleagues on the panel, as you know, we are very much diligent as regards analyzing these reports and paying keen attention to it. But I want us to take note of this. Now, let's in particular speak to exports, because exports really do tell about how your growth engine for the economy is operating. Now, if we look at sugar, over the period from 2014 up until the end of 2019, sugar has declined by 68.4% in production. And I've noticed a comment on our video which has identified that. Now, that is one, and we're not speaking here just only sugar in financial terms, but what about the broader macroeconomic implications of the operation of the sugar industry? So that's one. Rice, I saw rice being praised, that rice has actually earned us almost $100 million in exports earnings. But where does that put us? 2019's export level is actually 10.7% less than where it was in about 2014, at the end of 2014. If we look at fish and shrimp, for example, fish and shrimp has increased by 22%, which is excellent, I believe, because we begin to see diversification of the economy as the other sectors are lagging, or more of other sectors coming to fore, non-traditional sectors. Bauxite has only grown by about 1.8%. Diamond mining has actually declined by 20%. Timber has declined by 36%. And the major anomaly, or the major outlier variable in this regard in the macroeconomic framework of production, is actually gold, which from about 2016 doubles in its production. And we know that's why. That's as a result of the two large gold mining companies who would have come into Guyana. Now, that puts us in a very interesting situation, because when we take the period from 2014 to 2019 and we consider those major exports, our exports have increased by about 30%. But take into consideration what I would have just said. Those two main gold mining companies have driven our economy. And if we are to take those two companies out, and we analyze what has been happening in the real sector in Guyana, you will find that there's actually been a 15% decline from where we were in our 2014 level to where we are in our 2019 end of year level for our output. Now, why is this important, Dhanraj? Let me just wrap this up very quickly. Why is this so important? It is important for us to pay careful attention to which sectors are increasing and which sectors are decreasing. Because when you have that broad perspective, it will net out growth rates and growth rates. Sectors will offset declines in sectors. But if you look at all of those sectors which I would have just mentioned, sugar, rice, the stagnancy of bauxite, diamond, timber, you know what they all have in common? They are all labor-intensive sectors. And those sectors are sectors which employ thousands of people. Now, we all know the multiplier effect which consumption has in the economy. So it begs the question, therefore, why or what can we consider to be true economic growth and growth which begins to benefit the people? Now, just two things. One, it is important for us to consider the notion of oil, and it is important for us to consider the notion of gold. The reason why these have to be carefully considered and be examined with a bird's eye and very closely is because those sectors, one, they are non-renewable resources, and two, both of them, when they are scaled up and they are at that large scale, are capital intensive industries. And what does that have to do with what I term the backside of the economy, or the back end of the economy? What does that have to do with the unemployment rate? So how does the growth materially translate into welfare improvement for individuals at the household level? That is left to be seen. And I'd offer those as being my remarks for now on that matter.
So I've listened to all three of you.
I'm tempted to interject, Dhanraj.
I'm gonna come to you. I'm gonna come to you, Sydney. Let me just offer two points of comment, because I've listened to all of you, and there is one thing that I find that is important that we make mention of and clarify, is that one, looking at the growth rate is only one way of assessing the health of an economy. I will remind everybody that prior to the 2008 recession, the global economy was growing. You know, individual economy was growing. But like Bertrand Russell, a theory of the inductive turkey, you never know that you're going to live until Thanksgiving Day when you got your neck cut. So what you're all pointing to in some regard, like I said, one, we have to pay attention to the growth rate, but the growth rate alone is not the entire story. That's one. Two, looking at the growth rate alone is not good enough. You have to look at whether it is quality growth or not. And by quality growth, or broad-based growth, which is another term that might give some indication to what you're talking about, is whether or not is there polarization within the sectors. Is one sector doing phenomenally well and one sector struggling? And we also have to recognize that when you take oil and lump it into a 340-something billion dollar economy, if I'm correct with the size, naturally it is going to scale the average up when you look at all the rates, because it's an oil sector and a new sector. But when you set it aside, you also have to pay attention to the other sectors. Now, Sydney, I'm going to give you a chance to respond to the point that you want, and I'll come to you. But let me set the stage for the next question that I want to move us to. So we have talked about the growth rate. But you can have a growing economy that is not necessarily growing and creating the amount of jobs that you want and the kinds of jobs that you want. So I want to talk about job creation. I want to talk about employment level. And before I come to each and every one of you to give me your take on this, I would like to quote a particular statistic for each and every one of you. At the end of 2018, this is not within the COVID period, yes? At the end of the last quarter in 2018, the unemployment rate stood at 13.8%. According to the Bureau of Statistics, 13.8, way before we dreamed of entering into COVID. Now, one more point, 13.8% unemployment rate. You're talking about roughly 1 in 7 people in Guyana that are part of the labor force without a job, right? Now, put that in historical perspective. When you look at the unemployment rate in 1970, 1980, 1986, 1992, 2002, 2006, we have scattered data, but let's just use what we have. That 13.6, if you go back in time, the only 2 years in which our adult unemployment rate was higher than that, as far as the statistic that we have, is in 1970 and 1980. So consider the fact that at the end of 2018, we had 1 in 7 people without a job. We're having a growing economy. The growth rate is saying we're doing good. Unemployment saying a different thing. What do you make of this, Sydney?
All right, Dhanraj, thank you for that. So let me just go back to a couple of points that Richard made about disaggregating. first I want to mention also, when you look at the same information presented by the Bank of Guyana, you can find it in table 10.2. You would see agriculture sector in terms of real GDP, real output, has increased. And a lot of emphasis has to be placed on the performance of livestock, the performance of rice. I noticed Richard attempted to underscore the achievements of the rice sector. Mind you, the rice sector production in 2019 is the second highest production in history, only second to what was achieved in 2015. It's the first thing we need to recognize. Secondly, when you look at the mining and inquiry sector, this is something that hasn't given much attention to, but bauxite has continued to perform. And I'll tell you this, you can check the data for yourself. Between 2008 and 2018, the annual production of bauxite in tonnage averaged 1.5 ton. This is between 2008 and 2018. Let me further go on. When you look at the export earnings coming from bauxite alone, bauxite average, again, between 2008 and 2018, the figures there, $100 million in export earnings. We don't talk about that sector. That sector, and if you talk about the Bonasika project, which is expected to invest, you're expected to see over the next 15 years, $350 million injected. Part of that, 50 million, this is US dollars, will go towards taxation over the 15 years, and the company, which is Jinmai, is expected to contribute in terms of corporate social responsibility about 1.5 million US dollars. This is in the Sand Hill village. Now, so this is bauxite alone. We haven't gotten to talk about services, which is the driver of our economy. The driver of our economy. And so we can disaggregate these things and you will see the performances there. Now, I give you that the rice, sugar hasn't been performing, and we all know why. But there are other sectors which have been taking the burden. So we can't ignore what has been happening in the other sectors. They're key. Now,
any direct comment on the issue that we have an unemployment rate?
Yes,
at
heading
the end
into
of
that.
2018, that is at historical level.
Heading into that. Now, if you go back to the Bureau of Statistics, the labor survey, you would recognize that in 2010, from 2012, in fact, the unemployment rate in Guyana averaged about 12%. So 13% is no different. And I'll tell you why we have a 13% unemployment rate in the back end of this period. Unemployment rate has been spiked because of the unemployment coming from Gaisuku. Gaisuku had averaged about 10% reduction in labor over 2018, 2019. You're talking about 6,000 persons. That is going to affect your unemployment rate. And so indeed, you're seeing that 13% there, but that 13% isn't far from where we were.
So I'm going to leave you to something to think about, because I'm going to go to Joel now. But if indeed this economy is growing and you're going so vibrantly, there should be no issue in absorbing a displacement of 7,000 people. It should not be a problem. But instead, we have seen that kicking up inside of the rate. So the question goes back to, as Richard pointed out, is the growth broad-based enough? And are we seeing areas of the economy that are growing that are labor propense? You know, it's labor driven. Just something for us to talk about and pay attention to. Joel, Sydney used some statistics and made reference to some of the industries and their output. I know you have looked at this in detail for some time. Do you agree with the point that Sydney is making here? And if so, take it apart.
All right, Dhanraj, thank you very much. So I want to touch on a couple of points that both Sydney and Richard made. Now, I agree with you, and well, all of you are correct in your own rights. I agree with the point that has been made so far, we talk about growth, but we got to understand what these numbers mean. You see, numbers tell you a story, and you can't look at the numbers in isolation, right? The same point about sugar, and as you know, Dhanraj, I've done some extensive work on sugar and the impacts and all of that. And there is more to the point that Sydney is making. It's not just 6,000 people, it's 9,000 direct employment that were affected. And then you have the indirect employment. And these economists, well, all of your economists would know this better than me when we talk about the multiplier effect. So let me break it down for the layman in the layman's term, right? Who are the indirect employment? If you understand, I am not sure if any of you here except me grew up or spent some time in a sugar community. But these sugar community, what I would describe as sustain their own village economies. So the sugar estate creates employment, that is direct employment. Gaisuku alone in terms of employment wages, the last report I look at, the COI report, is about $10 billion in income distribution. Then the multiplier effect of that on the economy, you have private cane farmers, right? So there are private cane farmers who supply sugar cane to the sugar estates. Then you have the village shops. If you go into Wales, for example, or Enmore or Ifla, these stores that you see in these villages, in these bars, the guy who sells fish, the fish vendor who ride on the road and sell fish, the guy who ride on the road with a cart and sell the cassava and provision and greens and the goods van that come around. All these businesses, all these small are affected when you take out this, when you shut down the estate. So the multiplier effect is greater than the 6,000 when we talk about employment, when we talk about the unemployment level. All right. When we talk about the amount of money that has, the fact that we have shut down the industry, it has taken out about $40 billion conservatively when we take altogether the indirect effects. Now, I want to touch on the point about rice. So Sydney made the point, rightfully so, that rice has accounted for the largest production in 2019. But let me tell you why. Let me tell you the story behind the number. The story behind the number is when the sugar estates shut down, all these cane farmers went into rice. So that is what accounted for the increased production, right? Because you have all these private farmers and all these cane farmers. And I can tell you this so because my family is in the sugar business and they have been affected, and my family is pretty smart. He knew, my brother-in-law saw this coming since the year before, because they've been talking about 5 years to close down the estate. So he went into rice. He was the first man went into rice, and then everybody else follow thereafter. And I'm sure in other communities, all these land, they converted it into rice production. So that explains the increase in the rice production. Now let me tell you, as you all know, all the panelists here know, that in Guyana, we have, for you to do these analyses, you need statistics, you need data, and we're not good at, I mean, we're growing, we're improving, we've invested some money in the Bureau of Stats, but we're not there in terms of the kind of numbers and stats we want to do these analysis. So what you have to do what you do best, Dhanraj. You have to make inferences, deductions. You have to look and create scenarios and work within those parameters. So let me tell you why. Let me give you another reason why the effects of employment have not been, we didn't really feel it when we talk about closing down the sugar estates. Because if you look at the workforce, right? If you look at the workforce who make up these estates, these men, a lot of them were already reaching retirement age. So by the time, and again, my family is involved, so this is why I could tell you the story from the ground, right? At the level of the household. So by the time the sugar estates close, these guys collecting pension, right? So they're not affected, they're collecting their pension. And then a lot of them go into, you have a lot of companies now, security firms hiring people because you have more businesses coming in with oil-related investments. Again, I got divert a bit where Richard talk about, when we talk about the growth, the private investment that Sydney talk about, all of it is oil and gas related. So all of that investment created demand for security services. So a lot of these guys who are almost retirement age went into the security sector, right? The younger folks, you know what they did? The younger folks, thanks to CARICOM and free movement of people, a lot of them went go to other countries in the Caribbean and outside of the Caribbean, and they work for 6 months and they come back and they sustain the family. So that is the story and the ground behind the numbers. All right. Now we're talking about exports, and you make the point, rightfully so, Dhanraj, that exports, we can't tell the story of the economy when we look at gold exports and when we look at rice exports. That doesn't tell you what's happening to the welfare of people, right? So we talk about, Armstrong again talk about the service sector, the investment in the service sector. Now here is the other side of the equation. Where do businesses get money to invest from? Businesses raise capital in equity, and as you know, Guyana, we don't have a developed stock market, and a lot of the businesses are private driven. So the capital, our capital market, the businesses employ a lot of debt instruments. They borrow loans, they take loans from the bank. So that's where they get a capital from. And I have data from 10 years ago, from 2010 to 2019. The service sector investment that we talk about that is captured in GDP, on the other side of the equation, if you look at a non-performing loan portfolio in the banking sector, the service sector from 2010, and I would like to characterize that period 2010 coming on up to probably 2013, the economy was more buoyant. We had more broad-based growth. We had more investments, right? Services accounted non-performing loan was 1.5 billion, which moved to 11.2 billion dollars. That's over $9 billion or 600% increase. So while we seeing in the front end of the GDP equation that services account for so much of GDP, but non-performing mean, when we talk about non-performing loan, you know what non-performing means? Non-performing loans in the banking sector effectively means somebody or some company is bankrupt, right? So the companies that drove this investment in the service, they're now bankrupt. They can't pay the loan. All right. And if we let's look at the total non-performing portfolio from, it has increased from 7.3 billion in 2010 to 30.1 billion at the end of 2019. That is 312% increase or $23 billion increase. So that is the other story that nobody is talking about. So when we see in this growth, where the money coming from? Growth is spending in the economy, investments. Where it coming from? It coming from the banking sector. What is the health of the loans in the banking sector? You have these companies, the total business enterprise, $20 billion, $20 billion in loan companies together that are bankrupt companies out there. What is the impact on householders? Householders are people who got loans. Let's talk about it, come back to the community level, right? The people who were employed and the indirect employment, the guy who, there was a point where the estates, the sugar estates had their own fleet of trucks. And then because of high maintenance costs, they outsourced that service. So a lot of people went to the bank and took loans and invest in trucks. So these are private people providing a service to the estates. And all these businesses that we talked about earlier that were created as a result of the multiplier effect of the income distribution from that sector alone, those people went and took loans to build a new house, to buy a house, to expand the house. They went and took loans to invest in new businesses. And when that happened, this is, look, it's the numbers there in the story tells, the non-performing loan figure tells this story was happening. Now these people are bankrupt. They can't pay their houses, the house mortgage, right? Look where household mortgages move from. Household level of non-performing moved from $2.7 billion in 2010 to close to $11 billion. If we want to know how many households, I did some assumptions. So let's assume that an average of 3 persons make up a household. So we have about an average 250,000 households, right? Of a population of 70,000 people. Let's use our per capita income, which is just under 5,000 US. That translates to less than $100,000 a month. So let's work on the assumption that you have at least 3 people who are making income in a household. And let's assume that that 3 people, that 3 person who work in a household, their combined average household income is $250,000. So if you do the math, if you divide $11 billion to see how many households affected, you get like about 42,000 households that are bankrupt right now. They can't pay the mortgages. They're struggling to put the food. And I can break it down further. What is $250,000 average income? And these are the people, when we talk about growth, these are the people who are affected the most.
Yeah.
What is cost of living in this country? Right? Cost of living $250,000 could barely maintain a house and pay your rent and your mortgages and so forth. So now in this situation, those are the people who are vulnerable, who are suffering. But the numbers, 4.7%, will not tell you that. You have to dig into these numbers to tell you.
Yes, and Joel, I just want to piggyback on something that you mentioned, and bear in mind that all of what you're mentioning and talking about the people who over the last 5-10 years, whichever period you're looking at, who have took risks, made some investments, but have found themselves now with either without a job to service those mortgages that they took, lost their jobs, can't support family, and an entire slowdown in the economy. Businesses are doing less business than they were. If you take all of that, it comes down to the question. You're not going to see that, as you rightfully point out, in the growth rate until after a period of time. I just want to highlight a couple of things back on this issue of jobs. In 2017, when we had the forced layoff of Gaisuku workers, which was about 7,000 workers, and again, we all know 7,000 workers laying off, you're probably talking about 2 or 3 times that amount of households that would be affected. In 2019, although bauxite and gold and these extractive industry sectors were doing well, you had bauxite and mining collectively lost about over 300 jobs. And these are all just quoting from articles that has been published in the media about layoffs that companies in these sectors have made. In 2020, the Guyana Tourism Association, and some of you alluded to this earlier, made the point that about 50% of the tourism industry will be permanently closed. And this is more recently in line with the impact of COVID and all of that. In fact, they actually called for assistance for 22,000 people. So I wanna bring all of this back into the discussion, loop all of this around and look at the 25,000 feet view in the air to say that, yes, the growth rate might be saying one thing, but then when you look behind the numbers and see what families are facing on the ground, see what households are facing, look at the health of the mortgage industry, the household mortgage industry, you may not be seeing that vibrancy as you're seeing with the growth rate of itself. Now, gentlemen, I want to put those 2 pointers to the side. We talk about the growth rate. We understand the story. We talk about jobs. Not such a good story. I would like to share with you now that in the last 7 financial crises or economic crises that hit the world, one of the things that investors looked at very carefully as a predictor, not as a fortune teller, but as a predictor, a good guide as to whether we're going to go into a recession, is what is called the yield curve. Fancy name for our viewers, don't get tied up with the name. The yield curve basically is a measure that looks at where investors are putting their money. Are they putting their money in long-term investment as opposed to short-term investment? And so in normal circumstances, if investors have a good expectation about the future, they will invest in long-term instrument as opposed to short-term. So if you were to graph what is called this yield curve, you will see shorter period investment have lower returns, longer period investment have higher returns to match the risk. But when that yield curve gets inverted is when the alarm comes on. So why am I mentioning this? I'm mentioning this because I'd like to share with you something quickly. Let me share my screen. and tell me if you guys are seeing this. You're all seeing this?
Yes, Dhanraj, I am.
Good. So I looked at one simple instrument. Of course, this is not all of the investment instruments that are out there. I looked at the government treasury bills. I looked at the 90-day, the 180 days, and the 364 days. And I look back from 2010 to look at the discount rate movement here. And this is what you're seeing in 2010. This is what you can imagine. This is what an inverted yield curve looks like. It means investors are prioritizing short-term instruments over the long term. And we can understand that in 2010, we're just coming out of the economic crisis. So we understand that there might have been residual concerns there with the economy. But look what happened in 2011. It went up back in what would expect during a recovery period. Yes? 2012 had some minor hiccups there, but still the longer term treasury bill return on the treasury bill was still higher than that of the short period. So still consistent with our economic recovery. 2013, the same thing. 2014, the same thing. 2015, same thing. 2016, all still good. But look at what happened in 2017. 2017, once again, the curve inverted, and it stayed that way until 2020, April of 2020. So, my esteemed gentlemen, that little analysis is pointing to, again, it would not be the total, it's not the whole story, it's one aspect of it, and it's pointing to the way private investors perceive the risk and the trade-off and where the economy is going. Richard, this is up your alleyway. Respond to this.
So, Dhanraj, thank you for sharing that. But I just beg your indulgence, if you would allow me, because yes, I was unable to ventilate my position on the notion of the unemployment, etc. I'll be very, very brief, cognizant of time, etc. But I know you just shared the wonderful yield curve, but let me just take us back to where we were. We had discussed a 13.6 unemployment rate, but the reason why, and this is not my opinion here, but this is looking at the statistics, and I want to bring it into light because I believe that it offers a very important insight for viewers and listeners to be able to understand. Now, 13.6% is an unemployment rate. Where in the Caribbean unemployment rates are generally high, etc. We note that the growth rate has not been having much of an impact on the level of unemployment rate. Now, it begs the question, why is that happening? It has been mentioned by Sydney, and in particular Sydney, that the unemployment rate has been roughly 12 to 13%. And he alluded to the couple percent being as a result of Gaisuko, etc. But I want to say, unemployment as a measure for what is happening in the labor market and what is happening for labor is not the only measure, and it is not one which can capture holistically what is happening in developing countries. Now, there are two peculiarities that I want viewers and listeners to pay attention to. One is that the unemployment rate does not capture those persons who we call discouraged workers, or those persons who have stopped looking for a job. And we know in Guyana, there are a number of persons who have stopped looking for a job. The other component, which it does not capture, and very, very importantly for developing countries, is that of informality, the notion of informal labor. How many persons are operating outside of the official labor market? How many persons are perhaps doing higgling? How many persons are doing, what we roadside hustle, quote unquote, if we're to talk about Guyana? Those persons who Arthur Lewis described as being the disguised unemployed, quote unquote. Now, the youth unemployment rate is another thing which we must pay careful attention to in Guyana, because it is 20% and above in official statistics as well as in averages. The CDB has actually estimated it to be as large as 40% in Guyana. But let me just draw the attention of viewers, listeners, and panelists to some other statistics regarding the labor force. Now, the labor force participation rate, Dhanraj, which is the number of persons who are in the labor force over the number of persons who are eligible to work, who are what we call in economics the working age population. Even the Guyana Bureau of Statistics and all scholars who have examined this issue have all agreed that it is incredibly low. The labor force participation rate in Guyana is 54.5%. Now that is a very, very low figure. And what becomes even more alarming, Dhanraj and viewers, is that the rural labor force participation rate becomes even lower, 41%, 4 out of 10. That means for everyone who has a job, who is eligible to have a job, if you have 10 of them lined up, only 4 of them are actually employed in the formal sector, as we would speak, as regards employment. Now that puts about 6 out of 10 of them, or 5 out of 10 of them, in the informal sector. Now, the thing to realize about the informal sector is that the informal sector has an increased number of vulnerabilities as you begin to speak about informality.
Richard, just before you go on, I just want to, for our viewers who are looking at this, when you hear the term informal sector, we're talking about bottom house business. We're talking about the little chicken and farm business that you're doing, the small farm that you're doing in your backyard, the little, you know, taxi work that you might be doing one and off on a weekend.
Yeah.
It's not those jobs where you have a salary you're collecting at the end of the month. All right, go on, Richard.
Right. No, Dhanraj, thank you for that. Because the informal sector, if people begin to pay attention to it, they would realize that a number of persons in Guyana are actually employed like that. You know, a number of persons in Guyana who perhaps might be doing some tailoring, some persons who might have small cottage industries, etc. And they are not registered. They operate in a very informal sense. They sometimes don't even keep records, etc. But a lot of persons that we know get by like that. Now, the reason why I draw that to attention of panelists and viewers is because those who are employed in the informal sector, which from these statistics we can see are extraordinarily high, those persons are actually much more vulnerable. And when you stress a system such as what is happening as a result of COVID-19, such as what is happening as a result of the political economy affecting our responsiveness to COVID-19, you have a large number of persons who are actually vulnerable. Now, I just want to map this into what we're talking about, what we were talking about the point of economic growth. Lewis actually said, Arthur Lewis, the great distinguished Caribbean economist, actually said that the way that Caribbean economies in particular must develop is that they must begin to absorb these persons who are in the informal sector into the formal sector. And that in itself will begin to bring about, it will not absolutely cause, but it will begin to bring about structural transformation for the economy. Now, one last thing is that this notion of informality and this notion of low labor force participation rate has almost always been around. Now, if we look at 2012, the total labor force participation rate was 55%. By the end of 2017, the total labor force participation rate was 54.5%. And if we disaggregate it, what the statistics are actually showing is that the labor force participation rate for men, they've actually declined from 77 to 68%. And for women, it's actually increased from 34 to 43%. So we are beginning to see some trends in a particular direction in our economy. And why do I mention this? Because I believe that this underscores the importance of statistics and empirical evidence, empirical data in driving economic policy. Because after all, Dhanraj, what is it if we have growth without the consideration for people? What is it if the economy is growing without considerations for welfare and welfare improvements? So I just offer those.
Good. But
That.
before I let you go, I want you to give me your one line or your two line response on the fact that, and again, I said, we know we're going to keep coming back to growth. We're going to keep coming back to jobs. There's more to be said on these issues. But yet another indicator of whether we're heading into a recession have been the way investors perceive the economy.
Yeah.
Oh, what that statistic showed that I showed earlier is even before COVID, even before our election nonsense and charade started, we had an inverted yield curve. And to our viewers, I'm sorry I have to use that term, but it simply means the way investors look at the economy is not the way they would have looked at an economy in times of when there is a recovery and a growing economy in the future. So what is your take on that? Sydney, I'm coming to you in a second.
No, Dhanraj, let me just, okay, I'm unmuted. Dhanraj, thank you for highlighting that. But as somebody who is involved in or interested in, and has been involved in public financial management, I want to offer to you that it is my opinion that looking at an inverted yield curve for an underdeveloped financial market such as Guyana does not bear, or it does not have as much weight as if we are to view it in financial markets where they are more developed. So if you look at the variety of instruments that you have offered there, if we think about it, they are all encapsulated within the short term. They are less than 1 year, 364, 182, and 91. And what we have in Guyana also is a very underdeveloped financial markets where only banks and a handful of insurance companies purchase those treasury bills. It may tend towards the fact that they perhaps are discounting the future a bit more and prefer to purchase short-term instruments or shorter-term instruments. Perhaps the yield has been more on the shorter-term instruments and they just want to push the cash out. But it can also, on the other end, be driven by as a result of what the Bank of Guyana has been doing. And that brings us into the public financial management end of it. Because how the Bank of Guyana has actually been operating over the past few years is very interesting. And this notion about the government's overdraft at the central bank and the fiscal deficits, etc., over the past few days has been underscored. And we note that it has been ballooning. So from my perspective, Dhanraj, what that is indicating, if we're looking at the inverted yield curve for treasury bills, what it's indicating, very briefly, and I'll wrap up, it's indicating that government is beginning perhaps to have a liquidity problem where they are having to absorb more and more monies out of the system and plugging that into the cash management of what is happening with the government. But Dhanraj, like I would have said, I would not personally, and you know, economists differ in their preference and what they look at. I personally would not read too much into it because we are dealing here in Guyana with a very underdeveloped financial markets and very few players. So I'd also do.
Understandably so. But I think you land the question right back on my laps when you said one of the things that it could be indicating is a liquidity problem. And that is precisely what you would expect in a time when you will see that indicator, again, regardless of its limitation, regardless of the fact that you're dealing with a very fragmented and underdeveloped financial market. What you would expect to see that happening, that you will have to then pay more to entice people to get access to that liquidity. That points to a fundamental problem that your vibrant economy is not generating the kinds of tax revenues that you would have expected. So gonna leave that to the side here. I'm gonna come to Sydney. I know you have a couple of points to make before I go on to the other issue that I want us to focus on. I'll allow our viewers to take a breather, and I know if you're deciding to change the channel, I am sorry because I felt like I just came out of an economics exam and class as well. But we'll try not to keep banging on some of these economic concepts that are very jargon loaded. But this is important that we talk about this. It is very important that we talk about this because at the end of the day, this is going to affect whether you're able to go to a job tomorrow, you're able to bring home an income that you can afford provide for your family, and you can build the future that you want. All right, Sydney, you have a couple of things that you want to point
Thank you,
to.
Dhanraj. There's a couple of observations I want to make.
Yeah.
So I'll go from uh, just now straight all the way to the discussion and growth. I just want to make a correction, Richard. If you look at the Bank of Guyana table, I think it's 11.1, if I'm not mistaken, 11.3. It speaks about the labor force there. And when you use the data to calculate the labor force, especially from 2014 all the way to 2018, I think it has up to 2019 also, the labor force projects at 60% and not 50. This is based on, and they're sourcing the Bureau of Statistics. So that's one thing I want to mention. The other thing I want to mention has to do with the informal sector. Now, when we talk about the informal sector or informal employment, we're talking about situation in which people are not registered. So they're not registered with the GRA, they're not registered with the NIS. And we did a study, myself and Shamiza, for ILO, and we found out that more persons gravitate towards not registering because they felt as if from the minute you register, it means paying taxes. And so a lot of people, a lot of businesses that you see that are considered to be family businesses don't understand the importance of becoming formal. They see it as a penalty that when you become formal, you're taxed. The other thing that contributes towards a growing informal sector is the push for entrepreneurship. We are at the university, you would know this, Dhanraj, we never offered a program in entrepreneurship, which is to teach people how to own their own business and not to be employed. And so that idea has been trending, and a lot of people have been getting into the notion of entrepreneurship. When you look at, for example, the amount of small and medium-sized credit that has been issued over the last couple of years, you've seen that number continue to increase. And that is something that we want to take into account, which is why you don't see a big change in the unemployment rate from 12% to 13%. Now, I want to step a little further back, getting back to the Gaisuku situation. Now, I get it that we have to talk about the quality of growth, but you're talking about development there, and that's a whole different discussion, right? When we talk about household standard of living and household expenditure and household access to credit, you're talking about things like income distribution. So let me talk about development, because I think it's Dudley Sears who put it eloquent. He said, look, if you're going to talk about development, ask three questions. What is happening to unemployment, which is what we're talking about? What is happening to poverty, which is what I'll talk about? And what has been happening to income distribution? Now, since we're on the ball of the quality of growth and the notion of development, because I'm taking it to mean that, when you look at our Human Development Index, the HDI has shown considerable increase over the year from 2015 all the way to 2019. As it is, our Human Development Index is about 0.67 for 2019, 0.67 or 0.69, and it has been increasing. Now, we know that the computation of the Human Development Index captures a number of things. It captures education, it captures longevity, it captures even income. And so our Human Development Index has been improving. When we look at our Gender Inequality Index, development, how the inequality between male and female, you would be surprised to know that we have been performing well, better than many of the Caribbean countries. So yes, growth has been quality. When you talk about poverty, let's go there. In about 2009, 2010, or before, way before, the estimation of poverty was about somewhere about 43, 44%. And absolute poverty peaked about 26%. But then when you trace what has been happening to poverty today, poverty, which is by the definition of UN, persons living below $2 per day, Poverty in Guyana has moved to 36%, or I think a little lower than that. And absolute poverty has moved towards about 17.9, 18%. So you're seeing that the growth in itself has been contributing towards improving standard of lives for people. Now, we can have a debate, but let's look at, for example, minimum wage, public minimum wage. Public minimum wage has almost doubled from 2015 to 2019. I think it was somewhere about 39%, and public minimum wage today is about 70,000. And so these things affect the life of many people. And so growth is, you have quality growth. Now, let me end on this note. Where Guy Suku is concerned, I would be lying to say that Guy Suku is a sustainable institution. When you look at, for example, competitive cost of producing sugar, go right to Brazil, and you'll see we're being killed with the cost of producing sugar. If you ask me, sugar is dead. But here's the problem. The problem is, how do we redirect the resources in a comfortable manner that it doesn't shake our economy up? And this is where the government ought to be flagged for that. I think the approach was too rash. But you would believe me, and you would agree with me, that the process of transitioning labor to some of the other sector has to be done. The question is, how do we do it? We could not have done it so rash, and that's the backlash that we're facing. So, and finally, Richard hit the nail on the head as it relates to predicting a recession. As an economy in which the whole capitalization and the capital market hasn't been so advanced, we really can't rely on such a data. When you look at where the businesses are going towards credit, they're going to the banking sector. And if you look at for example, the amount of credit, and this is something you can take it as a double-edged sword, the amount of credit issued and the amount of credit obtained by businesses as against household, you would see, strange enough, that in 2017, 2018, of the total percentage of credit issued by the banking sector, 99.5% went to businesses. This means that households only received 0.05% of credit. And that is something that we have to take into account, and we have to pay very careful attention to. But to use the capital market to project in an economy like Ghana, we might be a little off or a lot off.
No, and I get the point. And like I said, in every one of the measures that you look at to assess an economy health, there's going to be shortcomings with each one of them. And so you have to rely on the signals of many of them. There are a couple of things that you mentioned that I want to touch on. You did mention the fact that for the last couple of years, public sector minimum wage have gone up, and considerably. But let us bear in mind that wages alone does not tell the story, because cost of living have also gone up. And the question is, to what extent? The other thing is, even in the public sector does not employ the majority of the labor force. So clearly, it's good in and of itself, but it still, again, does not tell the whole story. All of us have talked about the importance of looking at unemployment rate. But I will tell you that there are many working poor in Guyana. Many families are working, are included in the count that they have an employment, but that does not mean everything is okay. Families are living on tight ropes. They're living end to end. Some of them driving one accident away from entering into asking families to borrow money to help them out. This is time and again, you talk to people in society, time and again, you talk to people in communities. Some of them, even the national statistic that some of us are using doesn't even tell close. This is something that Joel alluded to earlier, to what you're seeing on the ground. And so we have to be mindful of that as well. Now, I want to go to the one other aspect that I want us mindful of the time that I want us to address here is this: whether or not you believe that there is a crisis that is coming or not, if we end up in a crisis, which some of you argue quite in a strong way, we're going to have to respond to that crisis. And history has shown that the most effective tool to respond to a crisis is your fiscal tool. That is the government's budget. This brings me to the question that I'm going to ask each of you. In the last 5 years, we have had expansionary fiscal policy year over year. We're at a point where we may or may not hit a recession, depending on which one of your arguments you decide to go with. But already we don't have money. You heard that from the request for funding for Gaisuku, that the Treasury don't have money. You heard the President reiterate that today, that there is no money. So if we end up in this crisis, and I'll state my position probably at the end, how exactly are we going to respond to this? Joel.
Dhanraj, before I answer you quickly, let me jab Sydney a bit. Sydney, tell me Gaisuku is there, not sugar, right? Gaisuku as an enterprise is there, not sugar, right? And the failure for Gaisuku is not because...
I mean sugar. I mean sugar.
No, sugar is not there, brother. And we could have that debate on a different forum. But let me tell you, look, we have to acknowledge, as academics, we have to acknowledge the fundamentals of the problem. We live in a technology age. We live in a world that is so dynamic. And dynamism means volatility, vulnerabilities, uncertainties. And how do you deal with that? You're talking about innovation, you're talking about creativity, you're talking about investments, you're talking about those sort of things. If you look at the first smartphone that was created, it's now out of business because of lack of innovation thereof, not because the smartphone industry is dead. BlackBerry is the first smartphone, the first company that created a smartphone. Now the BlackBerry company is dead, not because the smartphone industry is dead, because of lack of innovation, lack of good management, lack of visionary leadership. And that is what happened to Gaisuku. Any business could be dead because of lack of those things, lack of vision, lack of good management, sound management, and innovation. Company, you talk about entrepreneurship and the informal economy. You know what drives entrepreneurship? You talk about a human index. Now, as academics, you don't take those reports are not gospel, brother. Those reports are not gospel. I could rip apart the human index, right? Any one of us on this panel could take it apart, right? So let me use another authoritative source about the Human Development Index. It talks about education. What's the level of education from the same labor force survey? Less than 1%. Less than 1% of the labor force are educated at the level of postgrad. It's there in the labor force survey. You could go and see it, right? And there are many factors that contribute to that, right? So when we talk about entrepreneurship and intrapreneurship and to drive this economy, we're talking about the capital market as well, because you need access to financing. You can't rely on commercial banking for microfinancing. That is a whole different thing we're talking about. Entrepreneurship means innovation. Gaisuku has failed because of political influence by both administration, bad management, and Dhanraj know the rest, right? So I just wanted to put those points out there. Now, Dhanraj, you gotta remind me the questions, right? Because I want to touch on everything.
Because you just threw me under the bus. I know the rest, like I did work for Gaisuku. But anyway,
we've been in different forums where we talk about Gaisuku. I just want to come off because I know we press the time. So I want to hit your question. The
question that I want to respond to is the fact that we are at a state where we don't have monies to spend. We have embarked on expansionary fiscal policy or massive spendings over the last couple of years, yet the crisis is before us, depending on whether you agree or you agree not. Globally, there is going to be a serious economic impact, whether it's from the crisis or whether it's from our own failure compounded by our own political nonsense that is happening. How do we deal with this crisis when it comes, regardless of where it comes from?
Thank you, Dhanraj. So that question, I will answer it from leading on the same question you posed earlier about the fancy yield curve, right? And I would agree with the panelists, my colleagues here, both Richard and Armstrong. It's not a good indicator because of the underdeveloped nature of the financial sector. But in the context of Guyana, it tells a different story. And the story that it tells you, you got to understand how our economy is designed, right? Our banking sector has excess liquidity. But in the context of this crisis, we can't say that there is excess liquidity, because coming back to that overdraft balance that has been going crazy on social media, let me answer the question within that framework, right? What does that $92 billion overdraft balance means? So we know that there is a consolidated fund. The consolidated fund operates basically like a checking account. You have a business, and this is a business checking account. You write checks to pay for wages, to pay for investment. That is your bank account. So the government has such an account called the consolidated fund. Since now there's some legal ramifications here, which I'm going to touch on, and it's very debatable, but I'm going to touch on it nonetheless, fearlessly. Since 2015, if you examine the balance in that account, at one point in 2010, the balance in that account was $70 billion cash, non-negative cash money. In 2015, that account was $15 billion. It has never had a negative balance. A negative balance means you're borrowing money from the central bank. That is what it means. Why? The question is why. So let me give you my interpretation or let me give you my reason for that question, my answer for that question.
Make your reason quick.
The consolidated fund, when the government draw down from the consolidated fund, it means that it has to go through the parliament, the National Assembly, and all monies that are expended from that account has to be approved by the National Assembly. By going through the deposit accounts, it means the government has effectively circumvent that approval process. In other words, it means we have expended $100 billion without scrutiny. So we don't know where this money is. Now, what is the implication in terms of your question that you pose? We talk about the fiscal tool. We see how government revenue has increased, and that government revenue has increased through the massive increases in tax collections, which has which has displaced many people and evaporated their disposable income. So where will we get the money from? So if you check the IMF report recommends, and it states this, the central bank needs to nil that account out. How does it nil it out? It has to convert it into those same treasury bills you're talking about and sell it in the financial market. Who buys it in the financial market? The financial institutions, the commercial bank. Now, there was a point in our economic and political debates, right, in the parliament, where we talk about the government crowding out the private sector. Now, at that point, 5 years ago, when we talk about crowding out the private sector in terms of competing for capital, that's debatable because the banking system has a lot of liquidity, has excess liquidity rather. Now with the COVID pandemic, if you gotta go convert $100 billion into treasury bills and sell it, you know what's the total liquid assets in the banking system? It will eat up the excess liquidity, right? The total liquid assets in the banking system is just over 150 billion. The loan to deposit ratio is 56%. An ideal ratio is about 90%. So if we go and put $100 billion in the market in treasury bills, there is no money in the banking system to lend to private businesses, to lend to the individuals. So what do? It means the money that we're fantasizing about that we have in the sovereign wealth fund, the money going to pay back all those loans. It means we have to invoke COVID, and this is why we need a legitimate government to deal with these things, because in this current situation, in the current political dispensation, we're in serious trouble. So this is why we need a legitimate government tomorrow so that we could invoke COVID and do what we did in 1992 to build this economy. Go and get debt write-offs, debt forgiveness, get financial aids, borrow, beg. That is what we need because we don't have the money and we have to borrow. We have to borrow, and the money, oil price is low. The money that we can get from oil, gotta go back to pay all those debts. So that's my answer to your question.
Richard, I know we're running a little bit over time, but I want to give you some time to address that last issue. So if you can wrap it up in a minute and a half for me.
Thanks, Dhanraj. And I actually was preparing for that. So I just want to say a couple of things on what Joel has actually said. I want to say firstly that he is correct and he is also incorrect. Firstly, he is incorrect on the point of saying that government has been spending the money that it is drawing from the consolidated fund without scrutiny. That is an incorrect assertion.
He said, to be clear, he said when they're spending through the savings account, they're spending it without scrutiny, not the consolidated fund.
Right. So the deposits account he's talking about, about an overdraft from the government. But what that overdraft does is finance a government budget outlay that has already been appropriated. So he is conflating the source of the financing and its mechanism of financing the budget, and saying that that is illegal. Or it is being spent rather without scrutiny. That is not so. The money comes from the consolidated fund, and it is already stated what the government program of works will be. So that Appropriation Act has been passed. What it does, however, it hits on another point, Dhanraj, of 2 points really, with this notion of an overdraft and consolidated fund. 2 points that are very important. One, absolutely importantly, and I have not heard anyone in the public domain discuss this, is that that consolidated fund balance is a government debt. It is a domestic debt, but it is not captured in an instrument. What it is essentially a blank check almost from the central bank to the central government. What it does alarmingly is that it understates the government's debt position, because debt in Guyana is actually calculated as external. It is calculated as external plus domestic. But in Guyana, because we're not capturing all of the consolidated fund overdraft balance in domestic debt, you then have to add that $92 billion onto that. So the IMF makes this point in what is called its debt sustainability analysis, where it looks at the external debt, the domestic debt, and brings into Guyana's case the overdraft to see what has happened. And it stresses it to see what will actually be the outcome in Guyana's scenario. Anyone who is interested in that can simply type IMF Article 4 2019 and have a read of that document. They make it very succinctly. I just want to say, however, Dhanraj, that the two main things, and let me wrap up with it because I know I'm pressed for time.
Before you wrap up, answer me this quickly. If you're saying that the funding that is coming from the saving account is going to fund expenditures and outlays already approved in the Appropriation Act, what then is the benefit of taking the money from a saving account that is already in debt than taking it from the consolidated fund, which is also in red? What is the difference here? Why not take it from the consolidated fund since that is already in red?
You see, Dhanraj, what this entire thing speaks to is the point that what the government of Guyana needs desperately is public financial management reform. And this is not political party. The government, the state as an institution, needs public financial management reform, because what that speaks to, or the point that you are speaking about, what it speaks to is that the government must have a borrowing plan, what you call a borrowing plan. You must know your sources of financing. But what we are doing in Guyana is that we are doing revenue, which is mainly from tax. That revenue is supposed to match against our government expenditure. In our case, we run what you call a fiscal deficit. So we obviously have to fill that gap between expenditure and revenue. Our expenditure is greater than our revenue. We have to fill that gap. The only place you can fill that gap from is debt. We get debt from outside, external financing, and we get debt from locals. So external financing, they give money for projects, and that money is specifically allocated. What we are doing and what we are dangerously doing in Guyana is just pulling money from the accounts in the central bank and just plugging it in. But importantly, we are doing it without an instrument. Now, if you look at Bank of Guyana 1997 Act, and you look at the Fiscal Management and Accountability Act, both of those acts actually say, one, that it is illegal for the government to borrow from central bank. That's one. But secondly, the FMA, that's the Bank of Guyana Act, but secondly, it further qualifies in the Fiscal Management and Accountability Act that if the government is borrowing, it has to be paid back within 1 year, which means that you can only pay that back within a year if you are borrowing with an instrument. So in an ideal situation, what is supposed to happen is that the government issues an instrument, which central bank will then take the instrument, give the money, and then they'll have to redeem that before the 365-day period passes. Yeah. Now, the legal architecture that we have does not provide for instruments to do fiscal policy, which is what we're talking about, funding government. It only provides for government to do monetary policy. And this is as far as my reading of the public financial management laws are. And I've read quite a bit of them. So I just want to make that point, Dhanraj, and to say, this is where I will land with this, to say that public financial management reform is a critical thing for Guyana, particularly moving into an oil and gas economy. Now, why moving into an oil and gas economy? Outside of what we were fighting for at the Georgetown Chamber of Commerce and Industry for local content, outside of that, the way that citizens of this country will feel the effects of the oil and gas economy is spending through the government. Now that brings me to two final points. One, we have to have a different budget process in Guyana, where citizens are more participatory in the budget approach. And I know that the Guyana Budget and Policy Institute has actually been established with that vision in mind. We have to have a budgetary process, a public financial process that allows for citizen participation, not a very perfunctory surface level and cosmetic consultation where very little is taken into approach. We have to be able to have citizens participating in this. And when I will end with why we must do so. But the other point is that, and this is the second of the last point that I made an allusion to, is that the fiscal framework in Guyana, what our laws are that govern public spending, they are very weak. The IDB actually produced a paper in 2018 where they assessed Guyana's fiscal framework, that is how government spends money, against what the ideal measures should be for an oil and gas economy. Now, for those who are interested, can check the paper. It's called Strengthening Fiscal Framework in Guyana in Anticipation of an Oil Boom, 2018, Inter-American Development Bank. And out of 10 different areas that they identify, Guyana only has two of those areas. And one of them, I can tell you, that they have made mention to, it's not even being used in policy creation. That is the notion of the use of a debt sustainability analysis and a medium-term financing framework, or an MTFF. So, Dhanraj, essentially, we need to have a couple of things being done here in Guyana, and that is in reforming our public financial management architecture to include things such as debt rules, expenditure growth rules, revenue rules, looking at balanced budget growth, balanced budget, so we don't end up in this nonsense that we are currently in our macroeconomic framework, and using our planning tools. Where does all of that lead us to? We also have to begin to put into our legislation what many Caribbean countries who are growing strongly have put, and that is a Fiscal Responsibility Act. Yeah. Where governments can actually. I'm gonna have to cut you there, Richard, because fiscally. So I will end on that until my closing remarks.
We're going to have a more substantive discussion on our fiscal framework, and I can assure you of that, and we're gonna get to that. I want to come to Sydney. Sydney, I remind you of the question that I want you to talk about, because it's important for our listeners to understand whether you agree or you disagree in whether we're going into a recession, either by our own mistakes and misfortune or by one that is imposed by the public and global pandemic. How do we respond to this if we have a cash-strapped government and we have spent significantly amount of money over the last couple of years? Where is it gonna, the fund is gonna come from? How are we gonna respond to this? Give me a best shot in a minute and a half.
Well, I am a very short man, so I will keep this extremely short also. Now, I do agree with a lot with what Richard have said, and also Joel. But I think I want to also draw the emphasis on a key indicator which we have missed in this discussion, which is our debt to GDP ratio. And if you look at the data from 2012, our debt to GDP ratio was about 65%. In 2013, it was about 57.9%. And then when you track that debt to GDP ratio over time period, you've seen that over the last 3 years, when you factor in what Richard said, if you deduct it, it's around 40%. But if you factor in the deduction on the reserve, it is about 50%. Now, when you compare our debt to GDP ratio to many of the countries in the Caribbean, mind you, it's about 50%. If you go to Trinidad, their debt to GDP ratio prior to COVID-19 was 63%. Their finance minister projected, did their midterm project the other day, and he estimated over the next 3 years, their debt to GDP ratio is going to be about 70%. If you come to Barbados, their debt to GDP ratio is 125%. And the discussion can go on. Jamaica is about 103%. This talks about the likelihood of you repaying your debt and avoiding any domestic financial issues. So when you compare where we are with our debt to GDP, I think we're in a very comfortable position. And so we cannot ignore that statistic. However, in terms of how we emerge, I want you to understand that from my perspective, where I am concerned, I don't think we're heading into, as yet, I don't think at this position we're heading into a recession. However, I do agree that we need speedy completion of our electoral process. I do agree that we need the functional government to enact its budgetary process. And I do agree, Richard, that the budgetary process has to be conciliatory in nature. One of our biggest issues that we have in this country is economic inequality. And the last thing before I finish it off, even though our Human Development Index have been performing well, when you factor that in for inequality, 7.69, when you factor that in for inequality, it comes down to about 0.57. So it's saying when you put inequality into the discussion, it affects human development. And so we need to have a budget which reflects changing the structural aspect of the poor and the vulnerable people, bringing them out of that poverty. And I think if we can have a system which works in that way, I think we're in for a good time, a good economic drive.
You have made me happy for two reasons, because not only have you identified one of the weaknesses with that HDI, which we try to stay away from, but it goes to the broader question, and something that Joel pointed to, is that, look, we are all in agreement here, regardless of our training, that the indicators that we're relying on, they are only meant to give us an idea. They're not rules that are laid down that we can make all our investment and planning decisions on. All right. But we use them to guide and to test the temperature. Where you go to a doctor to test your health, he checks your fever, your blood pressure, all sorts of things. Now, gentlemen, we're out of time and we have to bring this to an end. But I'm going to give you, each and every one of you, 30 seconds to give me your wrap up. And I want your wrap up to, in some way, reflect on where we are. And again, I keep banging home, because I am going to say this now, that in my humble view, I believe we're heading into a recession. I believe so. I can air that. We can discuss that in more. I wanted this discussion to be about you guys and for you to talk to us and let us learn where your perspective are. Joel, can you give us your closing remarks in 30 seconds and bring this home as to where we are and how we should be pursuing the next couple of months, next year, the next 2 years, if possible, within the context of the global pandemic and the economic reality on the ground?
Dhanraj, thank you. And I would say right off the bat, yes, it's not rocket science. We are heading into a recession. In fact, I would say I would even go as far to say we're already in recession, because when we marry all what is happening back to reality, even if we get a government installed tomorrow or next week, the next budget will be till in September, November. By the time we get the next budget, we don't have a plan to deal with COVID. And if you look at our sister country, Trinidad, Trinidad has a well articulated, a well planned, a well designed, phased, uh, uh, phased proposal, phased plan in how they were going to reopen their economy. We ain't got nothing. We ain't know when we can done curfew. We ain't got nothing but COVID, right? So we got to deal with COVID. We got to come up with a plan how we reopening the economy, how we jumpstarting the economy, right? And by if the head of the aviation authority said we're gonna open the airport till next year, so we already in a recession, right? We're already in a recession, and even if we get a government next week, it's gonna take some time. All right. So
Richard,
thank you again for having me. Thank you for having me. It was good being here on the panel with these esteemed gentlemen. So it's a privilege. Thank you.
Richard,
Dhanraj, well, I want to start off firstly by saying thank you to you, the panelists, as well as the listeners and viewers for this opportunity to be able to speak to you, you all. Of course, 1 hour, 2 hours, they are certainly not enough hours to be able to ventilate the amount of issues which the Guyanese economy, the Guyanese society, and the Guyanese polity all face. Now, I started off, Dhanraj, by giving I started off my remarks this evening by giving a technical definition for an economic recession, and I said that it is 2 consecutive quarters of um, of of negative economic growth. Dhanraj, if you are here in Guyana and you walk around and you speak to vulnerable people and you listen to people who have been laid off from their jobs, etc., I think that, and Joseph Stiglitz, the Nobel Prize winner, actually said this. Perhaps we need to begin to rethink what the definition of a recession is, and are we already in that? Because after all, why did we establish the discipline of economics as economists? To study what is happening to poor and vulnerable people and how we can actually bring people out of that. So, as far as I am concerned, Dhanraj, for the poor persons in this country, for the working class, for those persons who are part and of those who are dependent on the system and the social system and the structure of the economy, etc., to be able to earn a living. Many of them, Dhanraj, they are already in recession. And I want to say for listeners and viewers to give some thought and credence to that, because John Maynard Keynes, who revolutionized economics, said that the difficulty lies not so much in developing new ideas as much as in escaping from old ones. And Dhanraj, I want to say that as we begin to move into 2020 further along, and we bring this oil and gas, and we have all these political transformations and dialectical processes within our polity and our society that is occurring, we must always remember the principles upon which this society is based. The Constitution acts as a social contract or a contract between an individual and the state to who that individual is birthed into. And I always point to a particular thing. What does the political system exist for? And I will point to none other than our very own Constitution. Article 13 of the general provisions of our Constitution said, they say, all of it, the objective of the political system reads, Dhanraj, the principal objective of the political system of the state is to establish an inclusionary democracy by providing increasing opportunities for the participations of citizens and their organizations in the management and decision-making process of the state, with particular emphasis on those areas of decision-making that directly affect their well-being. I think for far too long, Dhanraj, we have suffered in this country from what I term as path dependence that has been conjured by the Nobel Prize economist Douglas North. And we have for far too long been having to be dependent wholly and solely on governments. We need to have a stronger private sector in Guyana. We need to have a conducive environment for the growth of private sector, including entrepreneurship and entrepreneurial talents. And we need to begin to foster a new Guyana, or what I would like to term as being Guyana 2.2. And I end my remarks there, Dhanraj. Thank you, panelists. Thank you, viewers and listeners. Thank you. It's been an absolute pleasure.
Sydney, I'm going to ask you to not follow Richard 30 seconds, but follow your 30 seconds.
All right, Dhanraj, let me thank you again for this invitation. Viewers, thank you for tuning in. I think it's important that we advance many of these discussions because whether it be wittingly or unwittingly, it influences public policy. Now, just in wrapping up, like I've mentioned to you, I think that we have a resilient economy. And I'll tell you this, the reason why I believe in our economy is that 3 months ago, we weren't expected to be in this position, especially with the number of cases. That's one. Then when you compare what has happened in many of the other islands, for example, St. Kitts and Nevis, they had a stimulus package. Trinidad, they had their stimulus package. Barbados, they had their stimulus package. Guyana, we didn't have a stimulus package, but yet our economy continues to hold strong. And there is that has to be emphasized. And I think what has to be given is credit to the past sets of government, which has built this economy to what it is. We were touted as one of the least economy to deal with this, yet we are still one of the better performing economy in handling this in the Caribbean. And so there's something underneath the carpet. There's strength underneath it. I am saying that with all things equal, once we can resolve this political issue that is facing us, I think we can get back onto that road of economic prosperity. But we have to get over that hurdle. And if we do, we're going to take this economy forward. Thank you, Dhanraj.
Gentlemen, it has been one of the greatest privilege of mine to sit in a conversation with the three of you, that I intended to go for an hour at maximum, an hour and a half, then is almost approaching 2 hours. But I think if we have learned anything from the discussion, it underscores the importance of the issues. And it is precisely why the Institute has established this platform for us to have these discussions. It would not be the first, it would certainly not be the last. And inside of this discussion, every single one of you have alluded to issues that we need to continue to talk about. I would just like to end briefly to say, thank you all for your time. Thank you for sharing your thoughts and your insights and what you believe in, whether or not we agree or we disagree. If we all agree on these things, that would worry me very, very seriously. But I think the different perspectives add value. And as we go forward, I expect respectfully that the debates continue to be as sharp as they are. It's only in that way that we can move forward. Lastly, I'd like to echo the point on something that Richard stated, which is something that I also opened with when I said chapter 2 and 3 of our Constitution lays out precisely what the framers expect us to do. As citizens, we have to have this discussion. We must, not only to educate ourselves, but these decisions, when government takes decisions, they impact our ability to pursue the life that we want. The life that we want for our family, whether we're going to be able to send our kids to school, pay the rent, keep the utilities on, drive or walk to work, it affects all of it. And because of this, we must have a say in the decisions that are being made. This goes right down to the heart of what Richard said, that as we think about building our economy of the future, that must be driven by public participation in that decision-making process. And how we can do that and the way in which we do that as we go forward, we will talk again about this. Ladies and gentlemen, for those of you who have endured the pain of us in the last 2 hours, we thank you very much for your time. And we certainly look forward to continue to have the discussion as we go on. Right, Joel, Richard, Sydney, it's been a great pleasure. Thank you all, and I expect to see you all here again to continue to discuss the issues that matters to people. All right, thank you guys.
Good night, guys, and take care. Be safe.
Thank you. Good evening, everyone.